All right. Where to start? Where to begin? I guess I'll start with the quotes, the prices. Railtown's down a penny today at 44 cents, but that is the bid. The ask is 45 cents. The volume is 73,600. The last trade, 500 shares at 44. The other stocks I have here, Finger is down 4 cents at 131. Soundhound is down, 9 cents at $12.33. So it's interesting. I guess you got to make money, but I don't know if that's going to go much lower. I don't know anything about it really, except that it's a good comp. G-Bucks is up slightly at 14 cents. GDC's down 14 cents at $4.59. The government is open. People are going to get their first check Saturday, which should be good for the economy, and maybe it'll be good for the markets because I don't know how much liquidity has disappeared from commerce because of the shutdown, but it's probably not insignificant. Yeah, that's about it on the prices. Let me see what Railtown is doing right now. 44 to 44.99, 29,740 to 8. Well, they're trying to show you there's a lot of stock for sale. And again, I think it's just the same old tired games. But we got to live in their system, so we got to deal with it. All of a sudden, I'm feeling tired. I will rally. I will rally. All right, let's go through some of this because I do have some things to show you. So I just got to make sure I get down in the comments, because if I switch over to what it calls media, I could come back and miss 30, 40 of your comments. So let me do it first. Steve, hi, how are you? How's everything in Tampa? Tebow is number one and probably tied with Steve. Julius, salutations. Opa, Pete, hope you're well. Novak Djokovic now lives in Greece. I think that's pretty exciting. Daryl Collins, morning, sir. Morning to you. Tebow, Teals, good morning, William. Good morning to you. Jeff Grimm, hello. Hello, Jeff. Gary Madrill. Aw, puppy dog. Hey, William. Hey, Steve, picking up a little more. I think that's a good call. Gilby. Good morning, Gilby. Jim, good morning to you. Pat, good to see you as well. Buongiorno a tutti. Buongiorno a tutti. How are you, Giuseppe? Steve? That 500 was yours. All right. I'm always starved for good news. I'll write it down. That's awesome, Steve. Giuseppe, my goal is 150. I'm close. Good for you. Good for you. I'm not sure. I'm a little mixed minds. I'll start out with my concerns. I've got two concerns, basically. One is I really don't think, I think the deal's going to close tomorrow. I don't think there's a problem with that. But I don't know if the filing with the regulators is going to go in at the end of the day tomorrow. So I figure that'll be Monday, Tuesday, Wednesday. Let's say it's Wednesday morning. And then, just to be conservative, we'll say it's Wednesday morning. And then, does it really cause institutional buying in Canada? That's my concern. I'm not sure it is right immediately. I think it'll take a day or two or longer. So, yeah, I just wonder if it's going to take until the 24th or the 25th for that kind of institutional buying to show up. Anyway, that's one of my cautions, I guess. My other one is just a broader point. I just don't know how many weeks are left in the year where people are going to be at their desk. They're going to want to go skiing. They probably already, their performance has already been measured for their bonuses. I don't know. So my second point is, maybe my timeline shifts to later, and that kind of bothers me. I'm not going to change any of the numbers I've given you. I'm not going to weasel out of them. But I guess I'll just say on a parallel point of view that maybe the stock, which I've always cautioned, the stock will stair step in the first sort of $1, $2, $3 range before it can catch some the big guys and girls coming in. So to summarize those 2 points, I have a projection of 250 next Wednesday and a projection of 375 on Friday. What was I thinking? The next week I projected December 3rd, I projected 375. December 10th, I projected 425. December 17th, I projected 425. December 4th, I projected 375. And then December 31st, I projected 350. All of that can happen still, but it might be pushed out to not so much in November, more in December. And I don't know, the 350, the 425 might wait till January. I don't know. I'm not going to change any of this. I'm just, when I'm not going to attribute any kind of who's holding everything up. But when a company delays everything into the Thanksgiving, Hanukkah, Christmas time frame and New Year's, I don't know. The saving grace, the saving grace is it's Canada, so Thanksgiving they already had it. So maybe the Canadian buying won't be affected by early vacations. It'll be more concentrated in the second half of December. So we'll see how it plays out. I'm not saying I'm hopeless on it. I'm not trying to be negative. Feel like I'm going to be wrong again about my short-term projections, but I hope that's not true. So what are the positives? The positives are that AIP is going to close tomorrow. To the extent that allows some buyers who maybe were held back from buying until that close, to the extent they can come in, that's going to be good. To the extent that further clarification on what I think is an exciting deal that Thales announced sort of surprisingly last Tuesday. Maybe by this combination getting finished, they can maybe say more about it. That'll be good. And just in general, I think there should be a backlog of what's called enterprise sales agreements and relationships. And maybe even, maybe once the AIP deal is locked up, they can start talking about their cross-selling to some of the customers at AIP. So there are good things, and we don't know what one item is the straw that kicks the camel into gear. We don't know. So it probably is a good sign that I'm being a little bit worn out and a little bit cautious. It's probably a good sign that it's about to turn. The stock is trading very well. The chart looks interesting to me. And so we wait. We wait today, we wait tomorrow, and we see what happens. If one buyer comes in, like my favorite one is Mavericks, because I don't think they really have to do a lot of due diligence. They don't need any convincing. They don't need to read research reports. If Mavericks were to come in, let's say not next week, the following week, I don't know. What'll happen is they're not going to come in for 100,000 shares. They're probably not going to come in for 1 million shares. Whatever the number is, you're going to see, my guess is, I don't know, but my guess is it'll be by phone call. It won't be over the computers. And the effort will be to get somebody to give them size below the ask. But it may not work. They may have to just give a target, we're willing to pay up to 60 cents. We're willing to pay up to, well, it'd be in Canada. We're willing to pay up to $1 or $1.10. See how many shares they get. But once that happens, what you'll see, they'll buy some verbally, I think. I don't think everything's all computerized anymore. I think there's some human contact. So they'll buy some quickly verbally, and then they'll go in and they're the bid. Just using the American prices as an example, if they did it today, they might buy some, and then they go in and they may put an order in to buy, I don't know, 500,000 shares at 45 cents. That's a very bold bid. I'm not sure they do it that way, but theoretically, this is what will happen. All of a sudden, that bid, as the algorithmic selling, the program selling, the shorts, the pickpockets, as they're trying to sell the stock, the computers are picking up the clue. It's all by computer. Whatever's in those computers' brain, if you can call it a brain, they're noticing nothing's happening. That bid's not going away. And I think that feedback will go, and maybe not at these low prices, but at some point, that feedback will go to the automatic sellers, the relentless sellers, and I think they'll change the code, not the code, but the behavior will change. And I think, I don't know if it'll be around $1 in Canada, it might be higher, but you're going to get the combination of firm bids, perhaps dramatically reduced availability of this counterfeit supply, and other people are going to notice it. And so you might get some competition to buy the stock. All of this is by way of saying, like Jack McCarthy used to say to us from Lord Abbott funds in his rather animated voice, sentiment can change on a dime. And one of these days, I don't think it'll be today or tomorrow, but it always could be. This is an 80-cent stock in the U.S., and then it's $1.20. Might stutter step. It's not going to go straight up. But could it hit my targets, my optimistic? We just need two things. This and this, and that's all I need. We just need I guess it's better said, institutions need to see revenue and a projected convincing path to revenue and revenue growth. Whether or not we see it, we might see that in a delay. We might see it in some sort of guidance in a research report, or we might see it in an earnings announcement, management discussion. But what's important is that the institutions in Canada see it. And then what we need to see is all these buyers up in Canada who have been sidelined. We need to see them step up. It may be a combination that the price has to be higher. It may, like I said, it may be the AIP deal needs to close. Maybe they need to understand a little more about the revenue models. But that's bottom line what has to happen. What would help us for our confidence? Obviously, research reports would be great. I think it's great that the company put out a investor deck, and obviously it would be fantastic to just get a series of revenue announcements, which we've been waiting for, sooner rather than later. But it's exciting. I hope you're not taking my comments as negative. I'm just cautioning that, and maybe it's feelings more than brains, that it just may just take couple more weeks rather than right away. And I sure hope it starts in end of November, beginning of December, because I'm a little nervous that if buying doesn't come in then and everybody's skiing and New Year's Eving, we might have to wait till the second week of January. But let's cross that bridge. I don't think that's going to happen. So let me go through some of the comments and it's 44 cents by 45 cents, 75, 65 is the volume, and last trade 44.1. Good morning, Donna. Donna says good morning to all y'all. Fast Eddie, howdy, dollar bill. Donna M. William, you're funny. There's no way we can know when or how much. It's been slow closing the deal. I keep reading Canadian AI companies like it's going to stay a Canadian national treasure. Well, that's important. I think, Donna, you bring up something that I wanted to say and I forgot. One advantage that we have in Railtown, I think, is the government, the financial institutions, and let's be frank, subsidies and tax advantages and financial companies who then get benefits from the government. It's a whole campaign. So I think we're going to see investments coming into Railtown, definitely, from these Canadian pools of money. I'm just nervous. Is it going to really happen immediately after the AIP deal or not? I hope it does. I hope it does. But I'm just, I guess, cautioning that it could be a week or 2 weeks. Tebow Teals, William, there are more connected minds involved here than ours. We need to trust the management here. I agree with you. I trust them. I also appreciate yours and everyone else's insight. Yeah, I do trust them. And, when you're dealing with human beings and approvals and bureaucrats and attorneys and management, there's quirks of each person. Everybody has their strengths. And most of you have weaknesses. I wonder what that's like. Just kidding. But I think we're right at the end, Tebow. I think we're right at the end. I do trust the management, just their vision. Their vision has put them out ahead of everyone. I worry, although Donna's observation, I think, probably ameliorates the risk of this worry. But I do worry after reading yesterday about Langchain. Even if Langchain's product is inferior, if you have a group like Sequoia, they can raise $200 or $300 or $400 million like that and go take over some group of engineers, take over the company, and then put $1 billion to work or whatever is necessary and create a competing product. I mean, you got to try to see the ghosts out there. But if I understand it, Railtown's already ahead of all that. So no matter how much you throw at it, Railtown's ready to go. And, commenting again on what Donna brought up, there's this commitment in Canada to pour money in. So Railtown's not going to lack for both investment dollars, talent, and the wind at their backs. And they're not going to need to do a toxic deal or anything like that. So, and there's plenty of room for this competition. I just want Railtown to be first to market. I think they are. I think their product is first to market, but pretenders can step up. And, Elvis Presley beat Jerry Lee Lewis to stardom. Donna, it keeps jumping out at me. Is that a thing? That it's going to be in Canada? Yeah, it is a thing. Sure it is. Sure it is. Sure it is. And I think it's good, at least in the early stages. Now, do you worry? Does that extend that, my favorite buyer, Microsoft, couldn't buy them? I doubt it. I bet it's just all in the negotiation. I bet Microsoft, if they wanted to, could buy Railtown, and there's a pretty hard, fast agreement that, hey, this is a subsidiary and all the business done in Canada stays in Canada. But then Microsoft could bring the agents, to the rest of the world. So I think the sovereignty issues, the security issues, and the IP issues could still be isolated to Canada. So I don't think it changes that you could see major companies buy Railtown eventually, who are not Canadian per se. Most of these bigger companies are pan-national. I mean, Apple calls itself American, but who are they really? I don't know. For a while, they looked Chinese. Maybe now they're Indian. T-Bone Teals, I know the company appreciates the support this community has given and gives them. I feel time is on our side. I agree. I don't know if I'm sure they appreciate it. I'm not sure that the price, our buying or selling for that matter, in the United States per se has anything to do with the price in Canada. But I could be wrong. But certainly we're here, Tebow, for once it breaks out of whatever this limbo is, we're here. And I think then our support and our buying is definitely going to help. I also am not sure they owe us anything. I appreciate very much the opportunity to show you guys this investment and point out to you that we're able to get into it, in my judgment, at a pre-seed or seed round comparable price level, just because there's in my judgment, there's a misperception about who Railtown is and what they do. It might be as simple as nobody knows. So as the story gets out and they go, wait a minute, sounds like Line Chain. Wait a minute, this sounds better than Line Chain. Wait a minute, this is really first to market. Wait a minute, they don't need to raise any more money. Those kind of things. I think the stock is going to accelerate up to the upside. To get to some major percentage of the Lang Chain valuation. Maybe it doesn't go to 1.25 billion. Maybe it doesn't overshoot it, but maybe it gets to 75, 80, 85% of that value. And you have a $4 stock, a $4.50 stock, a $5 stock. And I think you're right, T-Bo Teals. Time's on our side with that one. And that's what we're trading, time for the arbitrage, time for the profit. To a hedge fund or an institutional buyer, they'd rather wait till the deal's closed, till they see maybe research or maybe directly from the company, they see this revenue path, and they'd rather pay $1 or $1.20 for it to know that, to be frank, they don't have dead money, and they can expect to see quarterly movements for their reports to their investors, that they can see quarterly performance in the stock price. All of that's coming, and it's all good for us. T-Bo Teals, even there, if there's a market crush, well, everybody likes money, honey. That's the typical market crush out there. I feel that where the price is now is a fair value. Yes. So obviously you mean a crash. I'm number one, we'll talk about the market. I don't think there's going to be a market crash. I mean, it can happen, but I think it's next year. I don't think it's now. Too many people are calling for it. But, that's an art, not a science. The only thing bad about a market crash, and I've seen it before, if it's severe enough and if it affects one or two banks or major banking investment banks, the window on financing can close quickly on everything, not just AI, everything. And I don't think that we're seeing that either, but I think, if I had to predict it, and predictions suck, and I suck at predictions, I'd have to say that any kind of risk of a crash and banks getting in trouble, I would say middle to the end of next year and maybe beginning of 27, rather than now. But it's risky. I agree with you. We need to pay attention to that potential. I also agree with you. Railtown is more than priced in a market crash. I mean, all you need to see, or all you need to see reflected in the stock price that somebody else saw it, all you got to know is revenues are coming, and that those revenues are high margin revenues, and they're repeatable, and the company's not going to have to sell stock. Once the shorts and their computers understand that this company is not going to have to sell stock to fund anything, LangChain still has to do the next round to fund their development. Railtown doesn't have to do that. I think they'll probably do something because that's what bankers do, Canaccord does, but I don't think they have to. Red Pepper Ronnie, hello again. Hello. I just called to say hello. I think about you every night. You're there at home. I'm here alone. Hello. It'd be better to sing that to a girl, wouldn't it? All right. Let me show you what I have. And I don't remember it all. I don't remember it all. All right, I can go through those. So I can go through UBS. All right, I'll go through UBS. I don't think it's going to let me download all of these, but I'll try. You sure have a lot of files. All right, it's 44 to 45, 5,650. Taking a while. Okay, it's coming up. I'm coming. Right. Just 4 more. Okay. Yes, I start here. This is UBS. Data centers to drive energy storage boom cycle in the next 5 years. I'm putting this up as a acknowledgement that Energy Vault is probably benefiting from this energy storage. AI data centers fueled power demand growth in the United States, which is likely to drive a boom cycle for energy storage in the next 5 years as more storage is needed to smooth fluctuations from wind and solar generation, according to UBS Securities. Global energy storage demand could increase 40% globally year on year in 26. Hong Kong-based UBS Securities analyst Yang Yishu told a media briefing on Wednesday. UBS. The demand for AI data centers or centries in the United States is very robust, but electricity is the biggest bottleneck. So while we've been bombing deserts and assaulting mountains for $20 trillion on behalf of an ungrateful supremacist country, China and other countries have been building up their electricity. But one way, I guess, is using some of the other energy sources and using storage. I don't think Canada has this problem. So it's another reason that Canada stands out. Renewables are the only power generating segment expected to grow significantly in the next 5 years in the United States. Because they produce power intermittently, the grid needs batteries to store that power. The US market is key for Chinese energy storage manufacturers who have a 20% market share in the USA because the United States has turned into a financialization capital of the world because it's one of their high margin markets. However, emerging markets in the Middle East, Latin America, Africa, Southeast Asia could see the fastest growth, Yan said in the briefing. Then UBS, just to counteract that guy David, and not that David was wrong, David came on to say that Michael Burry is shorting NVIDIA stock. Well, here's a company, UBS, one of many, very bullish on NVIDIA. So it's what makes a market. One person thinks it's wrong, others think it's right. But, just to quote a headline that everyone can read on MSNBC or CNBC, hey, Michael Burry's selling, and try to cause people to therefore get scared out of Railtown. That's the kind of emotionalism at least some of the participants here want you involved in, and you shouldn't have it right now. You should fight it. Anyway, Marty Schrubel, November 12th, NVIDIA stock has climbed 43% this year as the AI chip giant continues to capitalize on surging AI infrastructure demand and its dominant position in data center hardware. Its growth narrative remains intact despite export restrictions and broader tech volatility, thanks to solid earnings, strong customer commitments, and strategic alliances. NVIDIA's success is an essential part of the AI-driven bull market. Wall Street will be keen to find out how things are at the chip colossus and what's next when the company reports Q3 earnings next Wednesday on November 19th. Among those watching closely is UBS's Timothy Arcuri, who is waving the bull flag. He's ranked fifth among thousands of Wall Street stock experts. Fifth. Is he better than Burry? I don't know. But here's his reasoning. Arcuri expects fiscal third quarter revenue of roughly $56 billion, above the guidance. For fiscal quarter or full quarter four, he sees $63 billion as a reasonable target for revenue. Yet, with current production and inventory levels, Arcuri believes NVIDIA has over $5 billion of headroom. In other words, it could outperform by $5 billion and could guide several $billion higher. His model calls for about $66 billion in the fourth quarter. While some investors have expressed concern about the effect of rising memory and component costs on gross margins, Arcuri remains comfortable with his forecast of, look at this margin for NVIDIA, 73% in the third quarter and 74% in the fourth quarter. That's your margin. Wow. The analyst also expects NVIDIA to signal that it can sustain 70% gross margins throughout 2026. Arcuri understands that the surprise could be a negative one in 2026, earnings per share could be limited because of the backlog disclosure at GTC. Frankly, I don't know. It's not popping into my head. So I'm going to skip that since I don't even really know the company there, and it doesn't add to your understanding. Let's go to the so regarding China, following Trump administration's decision to block shipments, the issue seems settled for now, but it could have an effect in the future. Finally, Akuri thinks a major focus of the earnings call next week will obviously be the pace at which AI infrastructure can be deployed, as well as any potential customer concentration. Yeah, of course. Bottom line, Akuri expects NVIDIA shares are a buy rating backed by his target of $235. The implication for investors, upside of about 20% from here. But he's far from alone. Apart from one hold and one sell, every other analyst covering NVIDIA, 37 analysts in total, are bullish, giving the stock a strong buy consensus rating. So this comes from Tip Ranks if you want to look it up. I don't know if that offsets Burry or not. This is from the previous article. I didn't read it to you, but let's quickly do it. It's a risk. The biggest risk for Chinese exports to the United States is Trump's one big beautiful bill. And this is about the battery storage, the energy storage. It didn't add much, but I covered it, so I didn't hide it from you. All right, let's go on to the next one. UBS sees the S&P hitting 7,500 by year end 26. And you, of course, remember I have them here. I told them all to you. 8,500 I projected. I think it's going to happen more quickly. But anyway, it's fueled by AI and strong corporate profits. This is Ali Canal, a senior reporter. I used to be of an age where baseball players and centerfolds all looked old. Now senior reporters all look very young. Anyway, Wall Street's AI-driven rally just got another vote of confidence. I'm not saying they're right, but there's two sides of the argument, not just David's quick bullet point that Michael Burry went short. UBS set its S&P 500 forecast. Let me see if that GSPC is an index. I'd like to find an index. Forecast to 7,500 by the end of 2026 in a note Monday, citing strong corporate earnings and gains in a resilient technology sector. According to the bank's just published Global Economics and Market Outlook, UBS forecasts S&P 500 earnings growth of 14% year over year in 26. About half of those gains are expected to come from the technology sector, a sign that the Magnificent Seven will keep powering overall corporate profits even as other sectors play catch up. The firm described this current setup as a market still defined by AI momentum, but one that's starting to broaden beyond mega cap tech, a key development for sustaining and extending the current bull market. I happen to agree with that. I think leadership is going to broaden. It's going to go into other areas. Ironically, probably led by the financials, because I think we're going to have a melt up in the market first before any bad crash comes. Sorry about that. Quote, we expect capex to eventually widen out of the narrow tech sector and growth to become more broad-based. The report said UBS expects that shift to take hold after a soft patch over the next 4 to 5 months as tariffs work their way through prices. I don't remember when this was dated. I'm going to guess that tariff talk, we're already through part of it, followed by a period of global growth acceleration as businesses and consumer confidence improve and interest rates fall, which I think that's a contrary call too, which I happen to agree with in the short run. At the same time, UBS said US growth is essentially one big bet on AI, with investment concentrated in technology and data infrastructure. That view has been echoed across Wall Street, with economists crediting the boom in AI spending for keeping the United States economy out of a recession, even amid higher rates and trade tensions. UBS estimated that such capital expenditures contributed 78 basis points to GDP growth. Anyway, that's all boring. The firm called those figures of growth eye-watering, saying the surge in spending mirrors the technology build-out of the late 1990s, when a wave of investment in computer software and internet infrastructure fueled a decade-long boom in productivity and corporate profits. The surge, the 90s, also has fueled one of Wall Street's hottest debates, whether today's AI frenzy is sustainable or is setting up for a bubble. Stocks are already trading at nearly 22 times forward earnings, well above their 5-year average, suggesting that much of the good news is already priced in. However, UBS struck a more measured tone. Quote, the drama of a bubble inflating and exploding isn't inevitable, UBS wrote. We could just see the market rising strongly in 26 and then stalling in 27. The key is to monitor pass-through of AI productivity to non-tech companies. All right, this is why I started looking at UBS. And this, I don't think this is going to affect the market yet, but I think there are signs in the markets that point to a crisis in the financial markets at some point. I think it's going to be next year, but we've got to be alert, ever alert. My read on this, although there's plenty of guys and girls out there saying this is the signal that 2008, 2009 is here again, I read this as contained. I could be wrong, but I read it as contained. But let's go through it. UBS winds down O'Connor funds in a sign of First Brand strain. UBS Group AG is liquidating two invoice finance funds with exposure to First Brands Group, an early sign of how large financial institutions are dealing with the fallout from the bankrupt auto parts suppliers' collapse. The Swiss lender is closing the World Capital Finance Opportunistic Funds at its Chicago-based hedge fund businesses. O'Connor, which has seen its performance dented. Oh, I see. I interrupted that sentence. Anyway, the fund they're closing has seen its performance dented by direct exposure to First Brands. That followed redemption requests, according to a person with direct knowledge of the matter. Chicago-based hedge fund business O'Connor, I just read that. Okay, quote, we informed investors last month that O'Connor's working capital opportunistic funds are being wound down and the majority of the fund's assets will be monetized by the end of the year, UBS said in a statement. UBS emerged as one of the largest creditors to First Brands, which filed for bankruptcy in September and revealed that its sprawling network of auto parts factories and distribution centers was on the hook for over $10 billion, including some of the biggest financial firms. The bank's decision is one of the first indications of how major Wall Street players caught up in the bankruptcy are assuaging investor anxiety. About 70% of the fund's net asset value is projected to be recovered by the end of the year, the person said, asking not to be identified. UBS is also liquidating a high-grade strategy fund, with no exposure to First Brands. All of that fund's NAV is expected to be monetized by the end of 25. Todd Tuckner, UBS's chief financial officer, addressed First Brands on an earnings call, noting that the bank had no balance sheet exposure and that no investment guidelines were breached. I tend to believe it. Call me foolish. Quote, it's always unfortunate when clients generate losses. It's a great understatement. Tuckner said, adding that only a smaller of funds are affected. It's important to note that the most affected funds were targeted at sophisticated investors who had clear risk disclosures given to them. UBS Asset Management Division operates funds with approximately $500 million exposure to First Brands. They sold it to Cantor Fitzgerald. I think this will be contained, but we gotta be aware of it. O'Connor, which UBS recently agreed to sell to Cantor Fitzgerald, has an unsecured claim for $100 million, according to court documents. That's against First Brands. UBS Hedge Fund Solutions has an even bigger number with $200 million claim. UBS Asset Management has secured claims for more than $160 million. Anyway, I guess the couple of things there, I think there are going to be strains in the financial system, but I think it's going to be critical next year. I hope it doesn't happen now. We have to be alert. Also, at some point, maybe even now, but at some point, particularly if our accounts go up in value, if I can find an index, if not, maybe just buying longer term puts on UBS when the stock price is up, or other financial institutions will give us a hedge if there is a crash coming next year in the stock market. I don't see any comments, so I guess I'm boring everybody, but that's all right. I've got a little more here. I need to drink some water. All right, 1, 2, 3, 4, 5, 6. I don't know what order these are in. The price on Railtown is 44 cents. It really hasn't changed. The volume is 105,000. Two big trades right in a row. One for 29,700 at 44. So it seems like to me the main instigator of that trade is, and again, the same number of shares, 29,700 again at 44 cents. I would say that that's a reflection of buying interest in the stock. That's pretty strong. Okay. Here's a chart of UBS. I don't have any comment on it. I didn't try to do an analysis of it, but this is a 5-year chart. To me, that's a pretty orderly advance. I really don't see a collapse coming, but it has broken down, as it has many other times, in the against the shorter term moving averages. And in previous, like this one back here, you might have avoided some short-term depreciation if you had gotten out as it broken down. But over the longer term, this signal of breaking under the 20-day and the 50-day moving average as a longer term situation hasn't really meant anything over the last 5 years. There's this one bad period here at the beginning of 22. But anyway, it could come back to the 200-day, but I would expect that to hold in general. Nothing's exact. Look a few months ago, beginning of this year, it broke down quite a bit, but it snapped back up. Anyway, all I want to point out with this chart for now is if we get a melt up, which is what I think is going to happen over the next months, this stock's going to go up. And at that point, puts at least in lower strike prices are going to be cheap. And it might make sense for all of us, I don't know, buy 15 of the longer term puts. If there's a correction, you sell 5 to get your money back, and then you let the remaining 10 ride. You sell 5 when you're in profit, and you hang on to the remaining 5 for a bigger profit. But anyway, that'll be a strategy we explore later on. What's this stock? Okay, here's Railtown. And I've drawn unintentionally, I kind of drew a little bit of a wedge here. And maybe that's what it is. It's a bullish pattern. But anyway, if you drew it more parallel, it's the same message. The stock is breaking out. Now it's having a hard time because it depends on where you draw the line. But if it breaks out of here, I think you're going to see 50 cents and then 62.5 cents and then higher. There, that horizontal yellow, there's a little bit of resistance there. So, but it's higher. Right now we're trying to break out and it's testing it. But I think once it does, you're going to get a pop at least up to here, which isn't huge. That's around 60 cents, I think it says. All right, I'm just showing you these. G-Bucks, somebody the other day said, I think it was Richard K., that, hey, we got into Railtown and we could have made money elsewhere. Well, I just picked some stocks to see what happened. I didn't go through the whole list, but here's G-Bucks. If you had purchased G-Bucks instead of Railtown at the beginning of June, I guess you would have had an opportunity to make money in it. It just didn't work out that way. And so while we're frustrated, probably, at essentially being sideways, G-Bucks just evaporated accounts. It instead of going to 100 or 150, gold mining, 200 million, great app, whatever. It just took everything. So that's one stock. I'm not saying they all were negative, but that one was. What's this one? Oh, this is MTN. Well, if you had purchased it at the beginning of June, I don't think you heard about it then. I actually think you heard about it in July. But if you had purchased it in June by some odd chance, it went up in July, probably because that's when everybody was thinking it's going to, go to 500. Well, if you did that, if you had that opportunity to make money in Mingdong International, well, you had the opportunity, but again, your entire account, if you held on, has been destroyed. So yeah, it's been frustrating, but in the meantime, some of these other stocks that you had an opportunity to make money in, as Richard K. called it, I'm not so sure they gave you what you were looking for. This is GDC. If you had purchased GDC in the beginning of June, you're generally up. You're not flat, but I would argue in Railtown, most people are generally up from buying it in the beginning of June. Where GDC gets interesting is you had a run, and now, girl, you better run. You had a run that you might have made some profit in if you had been nimble, if you had listened to I don't know whom. I don't know who would have told you to sell. People were saying it was going to go to, $150, $200. Now, I will say GDC, this trading right here doesn't look that bad. It's breaking out, it's breaking above I think that's the 20-day moving average. You would expect it to stall a little bit at the 50-day, but you might have another 50 cents, a buck in there before it stops. But I'm not telling you to go play it. Other people might tell you. But this is one that if you had invested in instead of Railtown, it's giving you the same kind of performance Railtown has over that time frame. What's this one? Oh, Finger. Well, Finger's the opposite story. Um, if you bought it at the beginning of June, your experience has been mostly negative. If you traded it at the end of July, you might have made a little money. If you traded it at the beginning of October, you might have made a little bit of money. But if Richard Kay thinks that this gave an alternative chance to make money, he might be more nimble than most of us are. And it looks like Finger has actually been, at least in this time frame since June, destructive rather than all that great to your account. So I'm not trying to make negative comments on anything else. I just think Richard Kay is totally wrong, at least in the context of this group of stocks. I mean, if he was talking about buying gold or silver, yeah, he was probably correct. All right, let me just check if I disconnected the audio. No, I didn't. I didn't disconnect the audio. All right, let me go through this and then I might have to, I've had a lot of water and coffee this morning. I might have to go pee. What is it, son? I gots to pee. See, so you had two buy orders. I motivated by buying, I think, adding up to almost 60,000 shares. And then, of course, the selling came in 490. Well, I don't know. Let me see the bid. Yeah. No, maybe not. Those could have been buys too. 490 could have been a buy. 500 could have been a buy. And 2,000 could have been a buy. That's the last trade. But well, they haven't downloaded. Let me go through these, and then I might take a quick break, but maybe not. I might be able to power on through, but it's going to be 1 o'clock by the time I'm finished with these, and then I still have 3 hours, so I might have to do that. Okay. Where do I begin to tell the story? All right, here we go. This came out on, I'll show you the site. I'll show you the website in a minute. This came out as an online research report or research note on November 5th. I just happened to find it yesterday when looking at a newer note that a couple of you sent to me. It's about Railtown AI, and Railtown is defined as you've heard before, but now it's getting some publicity, application general intelligence for software development. This is good. They're getting out there with a message, creating a market, defining the market, and maybe creating it such that they're the solution. It's perfect. Railtown AI Technologies advances strategic growth with TELUS partnership. Railtown AI Technologies has taken a significant step forward in its growth trajectory through a newly announced collaboration with TELUS Corporation. The partnership integrates Railtown's next generation. That's a great marketing, great educational sentence. The partnership integrates Railtown's next generation agentic AI frameworks with TELUS's cutting edge sovereign AI factory infrastructure. Bravo! Positioning both companies at the forefront of Canada's rapidly expanding artificial intelligence ecosystem. The headline here is a transformative collaboration. Under the agreement, Railtown will deploy its proprietary agentic software development solutions on TELUS's secure sovereign AI infrastructure. I'd love to hear soon, does that mean all of TELUS's customers are going to use Railtown, or just the majority, or just the customers Railtown brings? I'd love to hear that. That would be very interesting. This collaboration ensures that Canadian developers and enterprises are able to access advanced AI development tools while maintaining full control of their data, code, and intellectual property within Canada's borders. By leveraging TELUS's trusted infrastructure and Railtown's innovative technology stack, the initiative plans to accelerate the adoption of agentic AI. Remember, that's Railtown's term. Perfect, perfect, perfect. A new generation of intelligent, autonomous systems that enable developers to build, deploy, and monitor AI agents capable of executing complex workflows with minimal human intervention. This strategic alignment strengthens both companies' leadership positions in AI innovation and data sovereignty. Two areas, so they strengthen leadership and innovation. Leadership in AI, innovation, and data sovereignty. These are two areas increasingly recognized as critical for national competitiveness and digital independence. So what are the strategic implications of the TELUS deal for Railtown AI? For Railtown AI, the TELUS collaboration represents a milestone that could significantly broaden the company's reach, enhance its visibility among enterprise customers, and amplify adoption of its frameworks across the Canadian software ecosystem. For example, market validation, partnering with a tier one technology leader like TELUS provides strong third-party validation of Railtown's technology and commercial readiness. Do you hear that? That's powerful. That means, at a minimum, that Railtown's technology is validated by a tier one technology leader as being commercial ready. It may also validate it as being first to market. It doesn't say that here. Another thing, accelerated distribution. Through TELUS's infrastructure and client network, Railtown gains access to a large base of Canadian software firms and enterprise users seeking secure, compliant AI solutions. Again, this is powerful. This says it, I don't even need to repeat it, but it just opens up tremendous client exposure out of the gate. Now, again, I'd love to know how much of that those clients will use Conductor. Next, scalable growth platform. The Sovereign AI Factory provides Railtown with scalable compute power and infrastructure to meet rising demand, enabling efficient and sustainable expansion. Brilliant. And then the fourth thing is this deal is aligned with national priorities. With growing emphasis on sovereign AI infrastructure and data residency, Railtown is well positioned as a trusted domestic provider. That's key, aligned with Canada's long-term digital strategy. CEO Corey Brandolini noted in the release, this partnership quoting, marks an exciting next phase for Railtown as we expand the reach of our agentic frameworks and empower Canadian developers to innovate within a secure, sovereign AI environment. That's powerful. TELUS strengthens its AI leadership. For TELUS, integrating Railtown's agentic frameworks into its sovereign AI factory enhances TELUS's growing AI as a service offering, adding sophisticated software development capabilities to its national infrastructure platform. TELUS continues to invest heavily in secure, high-performance data environments that keep sensitive information within Canadian jurisdiction, an increasingly vital consideration for enterprises and public sector organizations navigating global AI adoption. By collaborating with domestic innovators like Railtown, TELUS reinforces its commitment to supporting Canada's digital sovereignty while driving meaningful innovation and productivity through AI. That's pretty powerful. Why this matters for the Canadian AI ecosystem. The partnership between Railtown and TELUS underscores a broader national shift toward sovereign AI infrastructure ensuring that innovation, data, and intellectual property are developed and managed within domestic borders. It also signals a growing maturity in Canada's AI ecosystem, where collaboration between agile technology innovators and major infrastructure providers is accelerating the commercialization of advanced AI capabilities. For Canadian enterprises, the integration of Railtown's frameworks on TELUS infrastructure offers a powerful new option, a secure, homegrown alternative to global hyperscale cloud providers optimized for speed, compliance, and control. So what's the outlook? The collaboration positions Railtown AI for substantial growth potential in the demand for agentic and autonomous AI frameworks market as it continues to expand globally. The company is now uniquely placed at the intersection of the three powerful trends: sovereign data infrastructure, intelligent automation, and AI software-driven development. While financial terms of the partnership were not disclosed, yeah, that'd be great if they could, the operational leverage and market access gained through TELUS are expected to provide a meaningful pathway to revenue growth and industry recognition. That's great. It's a great paragraph. As enterprise adoption of AI accelerates, Railtown's alignment with a trusted national partner like TELUS significantly enhances Railtown's ability to capture market share, scale Railtown's offerings, and allows it to play a central role in shaping Canada's sovereign AI future. To conclude, the Railtown TELUS partnership represents more than a collaboration. It's a strategic alignment that strengthens Canada's position in a next era of AI innovation. For Railtown, it marks a clear inflection point, transforming from a promising technology innovator into an emerging force in agentic and sovereign AI infrastructure. With demand for secure domestic AI solutions on the rise, Railtown's AI Technologies is well positioned to lead the next wave of intelligent, autonomous software innovation across Canada and beyond. All right, I'm going to take a quick break, maybe grab a quick bite to eat because I'm fading. I didn't really have lunch. So here, I'll be quick, but here's where you can find that research, and I'll be right back. All right. Sorry about that. Thank you for allowing me to top up. I was very nearly out of energy, so I had to eat something. We'll see. I'm still a little tired, but it'll kick in. So thank you. All right. One more, and then we'll go to comments. This came out last night, and it's the same source, and it's got very good language. Railtown AI, rising star in developer productivity and AI software. As artificial intelligence continues to redefine the global software landscape, one emerging name is quietly carving out a niche with bold ambitions. Railtown AI Technologies, Inc. While giants like C3.ai, Planeteer Technologies, GitLab, and IBM dominate headlines, Railtown is positioning itself as a next-generation innovator focused on AI-driven developer productivity. This is what LangChain seems to be doing, but I think it's slightly different. And this is great that a report, and I hope more comes out, so that Railtown can claim not only first mover position, but it can claim and define the problem. It can be the definer of the problem with its names and technology, but it can be the solution. So Railtown is positioning itself as a next generation innovator focused on AI-driven developer productivity, an often overlooked but critical piece of the enterprise software puzzle. Railtown, look at this headline. Railtown, building the AI backbone for developers. Wouldn't it be great if they defined that and became the go-to product? Railtown AI's vision centers on automating and optimizing the software development lifecycle through its proprietary Conductor and LangTrax frameworks. These platforms use artificial intelligence to analyze developer workflows, detect inefficiencies, and generate insights that enhance code quality and velocity. The company's strategy is clear. Empower development teams to build faster, smarter, and with fewer errors. Sorry, it's hard to read. So they're going to leverage AI not as a novelty, but as an integrated productivity engine. This approach has drawn comparisons to GitLab. Get out of here. Which has successfully embedded AI into its DevSecOps ecosystem. However, Railtown is more concentrated on AI observability and productivity analytics, which could give it a unique advantage in a rapidly evolving market. while the lawyers futz around. Anyway, C3.ai, the enterprise AI pioneer. C3.ai is often viewed as the benchmark for pure play enterprise AI software. The company, C3.ai, provides configurable AI applications across industries, from energy to defense, enabling organizations to harness predictive analytics and intelligent automation. Where C3.ai focuses on industry-wide AI deployment at scale, Railtown's niche lies in developer-focused AI enablement. The distinction is significant. C3.ai sells AI solutions for enterprises, while Railtown builds solutions. Do they get paid to build? We'll find out. Railtown builds AI solutions for the developers who create those enterprise systems. So Railtown isn't competing with C3. It's directing its firepower at the developers who can still use CP32. CPR2. As organizations increasingly seek to embed AI throughout their software stacks, Railtown's tools could become a natural complement to the platform C3.ai provides. So this is it. You could argue it's a competitor, but it's a collaborator. This is powerful. This is great news. All right. Planeteer Technologies, turning data into intelligent operations. Planeteer has become synonymous with large-scale data intelligence. Really? Its artificial intelligence platform has gained traction among governments and Fortune 500 companies for its ability to transform complex data sets into actionable AI-driven decisions. Railtown, while operating on a much smaller scale, shares Planeteer's commitment to enterprise-grade intelligence, but again, from the inside out. Rather than focusing on decision intelligence for end users, Railtown's mission is to empower software engineers with AI tools that make development itself more intelligent. This AI for developers thesis could position Railtown as a strategic layer beneath enterprise AI systems like Planeteer's. Again, kind of like like many relationships, this can be cooperative rather than combative. It's exciting. Look how big Planeteer is. GitLab, the closest peer in developer productivity. Among all comparables, GitLab is arguably the most relevant peer. Its AI-powered DevSecOps platform belongs in a Tom Clancy novel. and has become essential for modern software teams seeking speed, collaboration, and automation. Railtown solutions align closely with this philosophy, but Railtown emphasizes diagnostic intelligence and real-time productivity feedback, thereby leveraging AI to monitor and enhance developer efficiency across the entire pipeline. As GitLab continues to prove the market demand, which is excellent, for AI-enhanced developer workflows, Railtown's focus on AI observability and code intelligence could fill a growing gap, especially among mid-sized tech organizations seeking cost-effective, plug-and-play AI augmentation. IBM, the blueprint for AI scale. IBM, one of the oldest technology powerhouses, remains a formidable presence in AI and software development. With Watson X and a suite of enterprise automation tools, IBM continues to evolve its approach to generative AI and developer integration. For investors, IBM represents what Railtown could ultimately become. Wow. A company that scales AI across the enterprise stack, from infrastructure to application to developer workflow. IBM's success in blending legacy software systems with cutting-edge AI provides a roadmap for how smaller innovators like Railtown may evolve through partnerships, acquisitions, and enterprise integrations. So in conclusion, a small cap with big AI ambitions. That's Railtown. While C3.ai, Planeteer, GitLab, and IBM operate at vastly different scales, they highlight the expanding universe of AI-driven enterprise software. Bing, 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 bing. Railtown AI's developer-centric model places Railtown at the intersection of two massive growth trends. One, the rise of AI agents and autonomous deployment or development. And two, the global demand for developer productivity optimization. As Railtown continues building partnerships and expanding its platform capability, Railtown may represent one of the few publicly traded small cap offering pure exposure to AI for developer operations. Railtown may represent one of the few publicly traded small caps offering pure exposure to AI for developer operations, a category poised for significant long-term growth. a category poised for significant long-term growth in a market dominated by AI giants. Railtown's agility, excepting its law firm, focus, and innovation could make it an unexpected contender. Railtown's agility, focus, and innovation could make Railtown an unexpected contender in the race to define the future of intelligent software development alongside these big companies. Pretty cool. All right, I think I have another chart of Railtown. Yeah. Railtown on the green in my clumsy charting way. Railtown on the green, I think the horizontal green, sort of horizontal, is support. And Railtown was testing that the last bit of time. They tried to drive it down, it held. And then on the green diagonal, I think Railtown is broken out from that resistance line and now is testing it, which is normal. I tried to draw in the blue resistance line because, frankly, you could also draw the resistance there. I think in both cases, or almost anyway, because the blue line, if I had drawn it perhaps a little more accurately, you might argue with me that it's breaking out. It hasn't quite broken out. But in any event, I think Railtown is breaking out of this wedge. It's not a wedge, this triangle. And it'll break out. It's normal to test it a bit. But once it breaks out, I think you're going to see a move to this number. I can't read it, 62.5. Then there's 70 cents. And then I think it can go much, much higher. All right. Okay, I'm going to go to your comments. Railtown now is bidding 42.91. The ask is 45. The last trade 43.5. I only show 43,000 in volume, which my guess is that's the real selling volume, but obviously it's not reflective of all the volume today. The last two trades I see are each 6,000 shares at 43.5, and my guess is they were just trying to hit the bid to cause you to panic, but you know better. Fingers down 5.5 cents at 129.5. Soundhound is down over $1 at 12 bucks. So one of our big comps is down, but you know, it's 11.98. But it's still got a large market cap, it's just not as big as it was before. G-Bucks is down something, half a penny at 13 cents, and GDC is down 14 cents at 4.59, and it's 1:30, and it looks like we're going to war, at least according to the Daily Hate. So let's hope not, but it looks like we're going to go to war. All right, let's get going. All right, Steve, Julius Quim, They should bought more. Good for you, Julius. Great. Good job, Julius. Steve added another 29,740 shares to close out. That's great, Steve. That's awesome. I wish I could have that much. Well, I think I'm somewhere around that, but a little bit above it in my IRA. But I wish I could have that kind of firepower. Good for you, Steve. Bravo, 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 bravo. Tebow, hi. I know you were checking. Tebow, I had to take a break and have a quick nosh. Ward, good afternoon, William and RT crew. I did some double D due diligence on TELUS. I understand they have a 30,000. Wow. 30,000 client ecosystem. I wonder if all those clients are going to use Railtown or just a big part of them. TELUS operates in more than 45 countries, Ward says, across 5 continents. It sounds like a Wilbur Smith novel. Ward Richardson, what I understand is that LangChain is an older AI system. RT is a new future AI agent. Bravo, that's great to hear. Ward Richardson, I'm still curious about these big contracts RT is waiting on to be signed in the US. Well, I didn't know they're waiting to be signed. I didn't know that. That's great news. But yeah, I want to see about revenue. I want to see about revenue. I want to see about revenue. So now what do we talk about? Now what do we talk about after the loving? Let's see what's here. I had a couple of newspaper stories I wanted to. West versus East, a tale of two Canadas. That could be the problem. Railtown is in the West and AIP is in the East. That could be the heart of the problem. From Barron's, September 15th. Dear editor, there are 2 versions of Canada, East and West. If I had to make a general, broad-based call of where the winners are in the dust-up with the United States, I'd point to Alberta, rich with natural resources, as home to most of the winners. Things out east in Ontario and Quebec seem far more challenging. Canada's pipeline, energy, and mining companies seem like better choices than its banks and manufacturing business. The reason I saved this, I think I'm going to throw it out because it's not that appealing, but the headline here is 5 places investors can find reliable income. Barron's, written by Elizabeth O'Brien. She likes the Oakmark Bond Fund, which yields around 4.6%. The iShares 1 through 5 year investment grade corporate bond ETF yields 4.3%. And then she likes 3 to 7 year products, Vanguard Intermediate Term Corporate Bond ETF, yields of 4.9, and then Brandywine Global Opportunities Bond Fund yields 5.7, and finally the Spider Bloomberg International Corporate Bond Fund yields 2.6. Anyway, I'm going to get rid of that. I don't think that any of those sound all that appealing to me. But I do think interest rates are going down briefly, and you're going to see bonds go up. So I don't know anything about Twilio. There's an article here on Twilio, TWILIO. That's fine. You guys can look up that one on your own. And advisors. And yeah, I think they pay to get listed. Cincinnati, James Haggerty. Never heard of him. Richmond, Virginia, Matthew Regan. Hotlanta, Mitch Reiner. Richmond, Joseph R. Schmuckler. I don't know if this helps you that much either, so I think we can move on from that. I think we can go on from all that. All right, so what else should I talk about? Railtown is 45 cents, 42.91. Last trade 45 cents. The ask is 45 cents. There's 46,500 on the bid, 45 on the offer. The volume now is 116,000 shares, and it was 442 shares at 45 cents. I don't want to sign off early because I'll go into a depression. I'll miss you guys so much. So let's just think about what else I can talk about. While we watch the price of the stock meander. So I didn't raise that, but maybe I should. Maybe you should. David Hunter has raised his target on the S&P to 9,500. A year or so ago, when I started showing you, his target was 7,500, and I put down 8,500 because I thought he was too low. Now he's even much higher than my number, which makes me want to go higher than his. So in a melt up, maybe the S&P will go to 10,000. The Dow 65,000, that's me. NASDAQ 30,000. The Russell, he had a target of 3,300 about a year ago, and I told you, and I have been telling you, that my target is 4,000. He's now raised his target to 3,800. See, you just wish you could be me. He has a target in this run-up still on gold of 5,000, which that was my target. I think he said 4,000, but I picked 5,000. Well, now he's saying 5,000. His target on silver was 75. I told you mine was 120. His target on silver right now is 100. So don't you wish you could make, oh my gosh, everything's in the red. Finger motions 128.5. Soundhound is 11.91. G-Bucks is 12 cents. GDC is $4.37. And Railtown's in the red at 45 cents. What's going on in the market? The Dow is down, because we're going to war. The Dow is down 652, NASDAQ's down 600, S&P is down 114. Let's see what's going on in the world. Michael Burry quits the market. He liquidates his hedge fund. I like this article. This was an interesting one. I should have tried to download the chart. I'm not sure I would have any luck. But it's about AI, and you're not going to get it unless you subscribe. But it's by Tyler Durden, Durden, November 13th. It will take $5 trillion to fund the AI cycle, and the United States government is on the hook for over $1 trillion. The AI revolution started when ChatGPT version 3.5 was first launched for public use on November 30, 2022. And for the subsequent 3 years, there were at best only sporadic questions about how this technology would be funded. In the beginning, it was understandable. Now, I'll throw out there, I think what's coming in the markets, maybe next year, the government and the Fed are going to be flooding the markets with liquidity. It needs to go somewhere. And at least this is something ostensibly productive. But anyway, in the beginning, it was understandable. Awareness and adoption was modest. The capital outlay to develop and implement it was reasonable and would be covered entirely with cash from operations. But then, as use of the technology grew, primarily among school and college-age students who used it to cheat on their essays and homework assignments, as AI was incorporated into everything from simple chatbots to complex agents, which replaced menial tasks and have led to the first wave of AI-inspired mass unemployment. The costs associated with this backbone of the next technological revolution skyrocketed, and the result was an explosive growth in capital spending, which has grown exponentially over time. And as the spending by the world's biggest companies grew, in the process lifting their market caps into trillions, more questions swirled about the associated costs. Initially, it was the data centers. The beating heart of the new AI technology, where all the large language model analytics and inference took place in air-conditioned warehouses in the middle of nowhere, but ideally close to electricity. But then, as the tsunami of data center construction swept across the United States, the result was that data center construction would surpass that of general offices. So attention turned to the cost. Attention turned to the cost of the power supply itself that would be needed to electrify these data centers. I hope we get away from old nuclear power plants, at least. We'll kill the planet for this need for speed. After all, the decrepit, remember, we've been spending $20 trillion protecting a theocracy in the Middle East, while the rest of the world has worked on their electric grid. But hey, the decrepit U.S. energy infrastructure and the lack of any nuclear power plant construction in years meant that it was only a matter of time before the United States would hit a brick wall when trying to feed this armada of data centers the gigawatts of power they need to run. Meanwhile, more and more of the cash from operations has been spent on AI-related spending. The world's largest companies are projected to start taking on debt, first a little and then a lot. This sparks concerns about how viable this latest tech bubble truly was. pushing the default risk of such tech giants as Oracle sharply higher. Sam Altman went so far as to leak trial balloons hinting that the United States might have to step in and bail out this particular bubble or suffer catastrophic consequences of the bubble bursting. And so 3 years after ChatGPT made its first appearance, suddenly everyone was asking the right questions. How profitable will AI be, if ever? Will it cover the costs needed to keep it afloat? At what point will CapEx spending soak up all the cash flow from operations? How much debt could the world's largest companies take on before the market rebelled and sent their stocks crashing? You know, it's interesting. If we hadn't spent $20 trillion bombing countries in the Middle East, just bombing deserts for no benefit, injuring and killing browner skinned people, spreading democracy, the new American century, this neocon crap, and then assaulting mountains in Afghanistan. What the hell did we get out of Afghanistan? We gave the copper to China. China has our airport. So we spent 20 trillion because a white supremacist theocracy, colonial country can't get along with its neighbors and wants Lebensraum. So for us to get up to speed on AI, it's now debt, and it's now building out power. Well, China didn't get involved in all that kind of insanity. They built out their power. I don't like the coal plants or the nuclear, but they built it out. They have the electric grid. What the hell were we thinking? Last but not least, some wonder if the only way that AI could grow was through U.S. government spending. Earlier this week, a must-read 58-page analysis by J.P. Morgan, I can't get it, tried to connect all of these disparate pieces and said that no less than 5.3 trillion, which is a small part of what we spent for naught. Who's running this country? So JP Morgan says no less than 5.3 trillion will be spent on global data center and AI infrastructure and related power supplies over the next 5 years. Now, I think the Fed and the government over the next 2 or 3 years are going to print, and worldwide, anywhere from 50 to $100 trillion in a last gasp of keeping our system afloat. So I think there will be capital here for this. And I think this may help prop up our economy. But, I mean, it's a fair question to ask. So the 5.3 trillion, quote, will likely require participation from every public capital market as well as private credit, alternative capital providers, and even government involvement. So while we're scrambling for this, everybody in this warmongering, white supremacist theocracy gets free education, free healthcare, and free endless support from Big Brother for endless soul draining, moral draining, morale draining, central bank draining, taxpayer draining war. What the hell are we thinking? Leaving out any moral questions, it's just financial suicide. Financial, I said. The question is not which market will finance the AI boom, but rather how will financings be structured to access every capital market in the world. The sheer scale of these investments has critical implications across the credit market landscape. Well, here's something to think about. In Canada, they've already built at least one, they may have two of these dedicated AI factories. They're already built, so they're there. They're going to be generating cash flow. So, in a way, maybe we're ahead of this issue. The sheer scale of these investments has critical implications across the credit market landscape. Let's look at the size of the market and both the funding and the power needs. To JP Morgan, the base case, you're going to need 122 gigawatts of data center capacity, and that'll be built from 2026 to 2030. Quote, the scale of demand for compute remains astronomical. JP Morgan said the number of data centers coming online would be even higher if it weren't for the power constraints. Again, what have we been spending 20 trillion on? What? Morgan team in Asia produced an even more stunning bottoms-up, unconstrained forecast based on semiconductor orders, and it implies growth of 144 gigawatts globally through 2028. Basically suggesting that the growth that JP Morgan's US team forecasts over 5 years would be collapsed into a 3-year period. Quote, current lead times for new natural gas turbines have ballooned to 3 or 4 years, and nuclear plants have historically taken 10 years to build. Adding 150 gigawatts of power in a timely manner, here it is. Canada has all this ready to go. Extra. Anyway, we just squandered our wealth on stupidity for 20 years. Absolute stupidity and morally corrupt directives, in my judgment. Adding 150 gigawatts of power in a timely manner is a remarkable challenge, particularly in light of grid upgrade requirements. Turning to the $6.4 trillion question, where will all this money to pay for this come from? JP writes that the funding curve is manageable now. A much larger call on alternatives awaits down the road. That's because annual data center funding needs in 2026 are $700 billion, which can be financed. The funding needs in 2030 are in excess of 1.4 trillion, which likely will require funding contributions 2030 from all markets. Hyperscalers are generating over 700 billion of operating cash flow per year and putting 500 billion of that back into CapEx. It goes on analyzing the different markets and which ones can absorb this amount of financing. And there's a $1 trillion hole, which the government, US government, should step in and take, which I think they will. The good news is that for now, some benefits are starting to be realized at scale. OpenAI just publicly commented that they have achieved a $20 billion annualized revenue run rate. Well, it's a summary of that 58-page report, which I can't access, and it's pretty long-winded. So the most shorted stocks right now are mega cap tech and Bitcoin, which all, according to an Oracle broke. Again, this is Tyler Durden. Gold is getting sold as well. Our gut says all of these feel like sources of funds, And it makes us wonder if there's a broad degrossing or liquidity issue starting to creep into different asset classes. Well, I don't think it's going to relate to our investment right now, but John Flood, Goldman Sachs top trader, this weakness appears to be high frequency trading jockeying ahead of the NVIDIA news earnings on 11/19. It's all very short-term views. I personally don't think it means we're heading into a crash, but that's an opinion. Subprime auto delinquencies worse than 30 years. Yields going higher. Verizon is axing 15,000 jobs. A new oil price war is underway. Swell. Wow. Goldman Sachs has put out a huge list of AI companies. Breaking it down into high profit first. And they have on the high profit list Cisco Systems, AMD, EQT, Expand Energy, Salesforce, Microsoft, SAP, IBM, Synopsys, ServiceNow. Coterra Energy, ASML Holding, Johnson Controls, Atlassian, MacTech, Amazon, Trans Technologies. They can't use the woman's room. Anston Networks, Meta Platforms, Quanta Services, First Solar, Taiwan Semiconductor Manufacturers, Envert Electric, Alphabet, CrowdStrike, Micron Technology, Hubble Applied Materials, MCore, Broadcom, KLA Corp, Cadence Design, CyberArk Software, Flex Limited, GE, Vinova Limited, Palo Alto Networks, Amphenol Corp, Cameco Corp, Combat Systems, Eaton Corp, Lam Research Corp, NVIDIA, Constellation Energy, Marvel Technology, Jabil, BWX, Tesla, Visla, XLAM, Palantir Technologies, AppLovin Corp, Credo Technology, NextPower Inc., Monday.com, Astera Labs, Antero Resources, Verato Corp, Curtiss Wright Corp, Argon Inc., Range Resources. Energy's coming back to life. MYR Group. And I think it says Avenue Point Inc. Those are all the profitable ones. The vulnerable ones, Southern Co., Duke Energy, Xcel Energy, New Era Energy, Dominion Energy, NRG Energy, American Electric Power, Williams Co., Kinder Morgan, Snowflake, Scandis, Hewlett Packard, Denison Mines, Equinix, Dell Technologies, MongoDB, Digital Realty Trust, Zscaler Inc., Datadog, WEC Energy, Entergy Corp., Sequoia Technology Holdings, Oracle, Western Digital, Cloudflare, Talon Energy Group, Centrus Energy Group, Coherent Corp., Vertiv Holdings, NewScale Power, Public Services Enterprises Group, Bloom Energy, Uranium Energy, CoreWeave, Ensource, Amerin Corp., Nano Nuclear Energy, Confluent, Elastic NV, Primoris Services, Nutanix Inc., NextGen Energy, Data Ocean Holdings, Micron Technology, Pegasus Systems, CNX Resources, Comstock Resources, Natural Fuel Gas, Gulfport Energy, Progress Software, Informatica Inc., and UR Energy. Those are the vulnerable. We'll have to pay attention. Just my reaction to that, Canada has the energy. They've built the data centers. They have the money dedicated for build out. So I think we dodged the bullet. But it's interesting to stay abreast of. So is never mind. Senator John Fetterman rushed to the hospital, heart problem. He fell. You know, they're putting all these emails about Trump and Epstein, and they're implying that Trump knew about the gross behavior, the horrible behavior, and he may have, but some of it's referring to the fact that Trump was threatening to go after the guy. And so, I don't know, I think they're misquoting it. Maybe we're not going to war. The story came down. They took it down, so that's good. Maybe we're not going to war. I'm glad to see that. They just sold a shopping mall, I think in San Francisco. Let me find out. Yep, I thought I recognized it. An iconic mall in San Francisco foreclosed for a fraction of its billion-dollar valuation that it once commanded. Apparently because of the shutdowns, but also the out-of-control crime. 7-story behemoth, a shell of its former self, valued at $1.2 billion nearly a decade ago. The San Francisco Center Mall, which was known as the Westfield Emporium, was sold at auction on Wednesday to the lenders Deutsche Bank and JP Morgan Chase. Before the pandemic, the mall served as a shopping hub in San Francisco, with residents and tourists flocking to its vibrant energy and big name brands. Whenever I was there, I did. As consumers turned away from the city's sketchy downtown and toward online shopping, the mall's value declined drastically. An appraisal at the end of 2022 valued the property at only $290 million. This kind of collateral destruction is deflationary, and it destroys money supply. All right, let's see. It's two o'clock. I'm trying to find anything that's interesting to you guys. U.S. and Syria strengthen ties just before another country takes it over. Fetterman hospitalized after fall, suffers injuries on his face. Well, I don't know what else to talk about. Jeff Schultz. Hi, William. Do you think RT will hit $1 within the next 6 months? Yes, I do. I think a more important question is, do I think Railtown will hit $1 by the end of the year? And I think that as well. I think the stock is going to go over $1 by the end of the year. I've been much more optimistic, but this delay in closing AIP has just shifted everything. And I'm concerned now about vacations and whether a lot of institutional investment decisions have been closed down for 2025. And I don't know if how many of them get a jump on 2026 or just go on vacation. So I'm a little worried that it's not going to go to my, $10, $15 high side numbers by the end of the year. But I do think Railtown will be over $1 by the end of the year. And I think by let's call it the end of the first week of December. But this AI deal has to close, and then information has to come out. And Jeff, if you had one institutional buyer, my favorite is Mavericks. Maybe they won't. Maybe it'll be somebody else. If you just had one institutional buyer in Canada, I think the stock is $1.50, $2, $2.50 fairly quickly. But like I say, I'm really getting concerned. Not for the company, not for our investment, just for the timing. I'm just getting concerned that we got to start thinking we're going to get the real bang for our buck in January, February, March, rather than before the end of the year. But anyway, Jeff, I think it'll be over $1, possibly within the next 2 weeks, but certainly by the end of the year. So I don't think you'll need to wait 6 months for it. And once it's at $1, it may not go up quickly, but it's going to be starting its march to 4, 5, 6, 7, 8, 9, 10. So $1 isn't a goal, and $1 isn't a reason to sell. $1 just confirms that it's on the right track. What we're dealing with here, for some reason, is endless delays, and then kind of really news that probably means a lot more good than what the stock price is showing, but they haven't been able to get out and tell the story, and the buying hasn't been able to come in. So it's frustrating. It's frustrating, but it doesn't change the fundamentals. Jeff, if I had to put it, I think we're waiting on attorneys, paperwork, and regulators. And that's been the same case probably for 90 days or more. Attorneys, regulators, and paperwork. That has nothing to do with the fundamental story. That has nothing to do with revenues. It has nothing to do with their customer pipeline. It has nothing to do with the $120 million that they'll get some percentage of, call it 10%. They'll get $12 million a year from just hosting all of the AIP companies over on the TELUS data center. That's $1 million a month, and it's almost 100% cash flow. At the margin, there's no cost to it, essentially. So these are huge things, but it's not reflected. 12 million in 100% revenue. That's much better than LangChain is doing. And LangChain just got priced at $1.25 billion. So for some reason, Jeff, really good news is doing nothing to the stock price. And what I submit to you is it gives you an excellent buying opportunity. And I think it's caused by the constant pressure from both opportunistic short sellers and maybe a group of trapped short sellers, but sellers that are playing the same game they always play with low price stock, hoping that when Canaccord comes with a deal, they've already sold the stock, they can cross their cash with Canaccord, and walk away with a profitable short. I don't believe that's in any way, shape, or form going to be what happens here, and they're not going to have an exit. But they're still doing, their computers are still set on sell, and just a unrelenting sell. On the other side, there's no buyers. We've bought, and I congratulate you for that. But it's not affecting the price. It must have some effect, but it's not really affecting the price. I think the over-the-counter price is much more of an arbitrage by these flashboy computers against the Canadian stock price. And up in Canada, no big buyers. They're not allowed to buy because AIP hasn't closed. I don't know how many of those buyers. They're not maybe allowed to buy pending other news. I don't know. And then if those are the issues, they may not be allowed to buy for a period of time afterwards in an abundance of caution, as attorneys call it. So it doesn't look like they're getting the jump on the public with knowledge of inside information. And it's very frustrating. But I don't think it changes the fundamental story at all. I think Railtown's far better than Langchain, but we're waiting for attorneys. That's what we're waiting for. The good news, it's going to close tomorrow. It's really good news. Our long national nightmare will be over tomorrow. But then the question is, when do the attorneys file whatever the required paperwork is with the regulators? And therefore, it becomes public information that the deal closed. Is that tomorrow? Or is it Sunday night? Is it Monday night? Or as I suspect, the soonest we'll see it is Tuesday after the close or Wednesday pre-market. I don't know that answer. So that's an unknown. But once that's out there, maybe the buying can come in then, Jeff. From Canada, I'm talking about. The Mavericks, the Omers, the Fidelities, all the funds up in Canada can start buying. But remember, a lot of the funds in Canada probably don't even know the story. Canaccord has had it on, I'm sure, I don't know it for a fact, but I'm sure Canaccord's had it on their restricted list for 10 months. And so none of the institutional brokers or retail brokers can tell anybody about the story. They can't have research. And since it's an exclusive contract tie up with Canaccord, none of the other investment banks know the story. They may have heard it at a cocktail party, but they don't know the story. So you have knowledgeable, well-heeled investors that can't buy because they're under a restriction. You've got one of the top 4 or 5 largest investment banks in Canada. They can't solicit orders or even talk about it. And then because it's exclusive, none of the other banks know about the story. So we're sitting here with no buying demand in Canada, frankly, waiting on attorneys. I don't know the reason why. It could be that the company had an argument with the attorneys, or one of the attorneys had a heart attack, or I don't know the reasons why. But Jeff, the whole reason this stock is sitting in this limbo is because they can't bloody well get the acquisition of AIP completed in less time than it took to build the Empire State Building. It's incredible. But the good news, it's going to complete tomorrow. And then the only unknown is how long does it take the attorneys to get to that file on their desk and put the paperwork across to the regulators. My guess is it takes to midweek next week, Wednesday. I don't see any urgency or prioritizing that the attorneys make regarding this transaction. I can't explain it. I threw out an asshole explanation that offended some people, so I'm obviously wrong on that. But I really don't know why it takes talented attorneys, I don't know, a month for 10 pages, 10 or 11 months for 100 pages. I really don't get it. But it's going to be over tomorrow, Jeff. It's going to be over tomorrow. And then if we assume they actually file it correctly by Wednesday, my concern is how long does that take to filter out finally to the institutions? And what is the self-imposed limit on those institutions, maybe by their compliance department or by their own attorneys? Well, they filed it on Wednesday, but you better hold off for a couple of days because we don't want a lawsuit later on. So I can see that the buying, if there's freedom of buying caused by the AIP completion, I can see that taking until November 24th, 25th. But then you're coming up on Thanksgiving holiday. But they don't have that in Canada, fair enough. But I don't know. And then you've got Christmas and Hanukkah probably knocking out the last half of December. So basically, in Canada, it's possible that the buying that I'm looking for has to be condensed from November 24th to December 12th. And odds are there's going to be long weekends and cocktail parties. So Jeff, the issue is I don't see it taking 6 months, but I'm not sure that the stock is going to do much better than $1.50, maybe $2 by the end of the year. We're going into holiday season. And Jeff, I lay it at the fault of paperwork. Whether it's the attorneys, the regulators, the dog ate the paperwork, I don't know, but it's insane. I really think it's insanity. However, the good news is, Jeff, tomorrow it's over with. Tomorrow it's over with. And all it takes is one or two buyers. All you've seen is selling in this stock in Canada. It's all you've seen. Obviously, somebody's buying, but it's not a concentrated buyer. You've seen concentrated, dedicated selling, but of stock that doesn't exist. Well, in face of that, I don't think it's going to start next week. Let me be blunt. I think it'll start the following week. And then looking at the calendar, depending on how much everyone boozes or sleeps with their secretaries on winter getaways or takes their family on a ski vacation or just takes a break, I don't see the institutions really stepping up next week as a likelihood. It could happen, but I think it's going to be slow. I think the attorneys are going to take till Wednesday in order to file the paperwork. So I think the next 2 days, Friday they'll go to cocktail partying. They'll start Thursday night. They'll drink until the morning, won't come into work on Friday. I just don't see anything happening next week in terms of institutional buying. So that puts us in Canada. You know, they don't have Thanksgiving. So that puts us, I don't think they'll be in the office on Monday the 24th. So probably around Tuesday the 25th, when we're all at Thanksgiving holidays, probably be from Tuesday the 25th of November to, if we're lucky, the 18th of December. And I think the 3 weeks in December, there'll be 3-day weeks. So I actually think, and this is what bothers me, I think concentrated effort by institutions is going to boil down to 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 trading days. Now, Jeff, I could be totally wrong. Tomorrow there could be a big announcement. Next week there could be 2 or 3. I don't know. But if I'm calling it for a probability, drinking, taking weekends off, celebrations, the books are closed either at the end of October, end of November. The bonus has already been earned. I just don't see these institutions doing anything over the top in December. I'm not saying the desks will be empty. I'm not saying they'll do nothing, but I don't think you're going to get your varsity team, and I don't think you're going to get full-on concentration. So that's what's got me frustrated for the rest of the year. But I think, Jeff, I have it over there. I think in January, it'll probably take, New Year's is usually the same day as Christmas. So Christmas comes on Thursday. Kwanzaa starts on Boxing Day. So that's a Thursday. So New Year's Day is that Thursday. So I think the last week of December is a goner. I think the first week of January is probably gone too. Let's just throw it away. So institutions will come back to their desks in Canada, probably starting the Tuesday and Wednesday of the second week of January, the second full week of January. I don't know what day that'll be. That'll be 1, 2, 3, 4. You know, that'll essentially be the 12th of January or 13th. So let me just say, by the middle of January, I think the soonest concentrated buying is going to come in from multiple Canadian institutions. So if we're all waiting for that, and we've spent our money, and it just, yeah, I think we've got to make it through the holidays to get the $5 to $10 to $15 move. But until then, I think the stock is going to be over $1 by the middle of December. That'll be $1.50 in Canada. So I have a hard time thinking the institutions are going to do anything in those last weeks. So I think maybe the highest it gets in Canada in December is $2, maybe $2.50, which would mean maybe $1.50, $1.75 target for Railtown in the United States by Christmas, Kwanzaa, Hanukkah. So that's not as exciting as I thought it was going to be. But it's just a delay. It's a delay because the paperwork is, I can't imagine. I mean, it must read like Shakespeare. Or it has the style of Hemingway. Or it's going to be made into a major motion picture starring Brad Pitt and Julia Roberts. I don't know what the hell's taking so long. But it's going to be over very soon. The problem is, Jeff, I can't get it out of my gut that it's running into the holiday season, which is okay. I mean, it's okay. I think the guys and girls at Railtown won't take holidays. I think they'll work their ass off. And AIP, those companies. But I'm just not sure about the deal making. I'm not sure how many deals get made and closed over holidays. It's a good time to network or spend the night with your neighbor's wife, but it's not a great time for deals. I just don't see it. Okay, let me give you a couple positives so I don't depress you. I think I just read to you one of the first research reports, which as I read it, it seemed to have a little bit of input, maybe not from the company officers, but maybe from Rebecca Kurzweil, I don't know. But it seemed to have a little guidance. I could be wrong. But that indicates to me, Jeff, that we could see research after the lawyers get around to filing the paperwork or filling out the paperwork and the company files the paperwork, whatever happens, with the regulators, and the regulators review it and say, oh, okay, like we say in the States, oh, okay. They say, great, we can approve this as a release, and they put it out over their system. I think Wednesday, I don't think it's going to be sooner than Wednesday for that. I could be surprised, but I think it'll be next Wednesday. If there is some sort of cone of silence or restriction on information and discussion and disclosure and all that because of the AIP transaction, I don't know how long it takes to lift that cone of silence and make everything a level or a fully disclosed playing field again. Let's just assume it knocks out all of next week. So it's the following week, let's assume, not next week, the following week, that the company can maybe have Zoom calls or invite analysts to their office or go to see analysts. And by the way, Jeff, when I was studying, have been looking at TELUS and UBS, and these two pieces of research, TELUS has a lot of research coverage. Barclays, Cowen, this Desjardins, I think it was RBC, Dane Rauscher, I think TD Bank. Anyway, I'd say they have 7 or 8 research analysts on TELUS. It may be more. So I would think that many of those same analysts, because they know the importance of the Railtown transaction and the collaboration, I have a feeling a lot of those analysts are going to follow Railtown. I don't know that. I'm just assuming it. Well, let's say you get a handful, 5 analysts. Not this coming week, the following week, they're able to talk to management and they do their research. They get to look at some contracts. They get to look at the revenue projections. They get to look at the business plan. They get to ask their questions. Let's say that takes all of that week. So that takes us into Thanksgiving week in the United States. If some of those analysts are in the United States, they won't do anything over Thanksgiving week. But if they're in Canada, that doesn't make a difference. So Thanksgiving week, Jeff, I think you could see 1 to 5 or 6 research reports coming out. They're all going to pop along with each other. And that could be quite exciting if any one of them comes up with a nice target, and if any one of them has institutional following or retail following in Canada, it could be significant. And research analysts, Jeff, they can make projections. The company can't make projections. CEOs and longs can't come out and make projections without a lot of caveats anyway. But analysts can, and analysts can bring in their experience with related companies, the overall size of the market, and et cetera. So on the positive side, Jeff, I will strongly suggest to you that Thanksgiving week, which is longer than I thought it would take, as you know, if you've been listening to me, but I think Thanksgiving week we'll get research reports. That could be a real positive to the stock price. Better than news, better than some sort of interview. Research, particularly because in Canada, there is research on low price stocks. In Canada, there is investment banking on low price stocks. In Canada, there are institutions that buy low price stocks. In Canada, there are trading desks for low price stocks. So the research, which I would say to you is essentially 3 weeks away, 3 weeks, I think it's going to have a huge positive effect on the price of Railtown stock. I think it could drive the stock to $2.53, $4 Canadian. So call it $253 US. Those reports could do that in December. So that's one positive I want to say. Second positive, I think the company has to get its annual report out either next week or by the end of November. And to the extent that they put a management discussion paragraph or two in there, that could be powerful. I'm not expecting it. But if they can put some sort of discussion or guidance, that could be huge. So that's my second thing. Thirdly, there are revenue announcements, I think, coming. Do I know that for sure? No. But I believe Railtown has been working extraordinarily hard over the last 10 or 11 months while the attorneys check with human resources to see if they are being treated fairly. I think there's a big pipeline. So my third positive point, Jeff, is you could see revenue deals announced, and maybe many of them over the next weeks. Problem is, I'm not sure there's going to be any revenue in those revenue announcements. So to you and to me, we're going to look at it, another one of those. But to the analysts and to the institutions, it might finally, the penny might drop and they go, oh my gosh, we better get in on this. So I think that's number 4. Number 5 is, I think there's 2 institutions and their subsidiaries who don't need to do any due diligence. They don't need any research reports. They don't need guidance. They don't need to talk to anybody. And if they want to get out ahead of the crowd and buy 5 or 10% of this company, they got to do it now or before the end of the year. Those 2 institutions, one is Maverix, Maverix, founded by John Ruffalo, Maverix 1 and Maverix 2. Between them, roughly $1 billion and a half in Canadian assets under management in cash. Well, John Ruffalo founded AI Partners, and John Ruffalo said to Railtown, I love your product, buy us. So I think you could see buying from Maverix or one of their clients, or if they have portfolio companies. The other one is OMERS, OMERS. That's the Ontario Municipal Employee Retirement System. The past president of OMERS, CEO, was Mike Nobrega. Well, he's the founder of AIP Partners. And he liked Conductor so much, he said, buy us. So I think OMERS or OMERS Ventures or some other OMERS fund or OMERS investors, they could all come in after the buying restriction is lifted, and they don't have to wait for guidance or talking to Corey or studying the revenue runs or talking to Tellus's vice president of organizing the other vice presidents to have their weekly meeting and then discussing it with the secretary of minutes of the consolidated meetings in an amalgamated report condensing 3 different divisions and coming up with revenue projections of the deal with Railtown. They don't have to wait for all that. So I think that was my 5th positive. I think you could see buying from one or both of those institutions. All it takes is one of those, and the stock is $2 or $3. I don't know if it's going to matter, but I guess that's my sixth thing. I don't think it's going to matter, but I think TELUS will try to provide more news on what the arrangement is with Railtown, but I think it's going to be devoid of revenue projections. So again, I don't think it's going to matter to us, but it could matter to investors. And it's always possible that some of TELUS's largest institutional investors, they'll get the notice. And look, professionals do this, Jeff. They say, oh, well, TELUS is going to do great, but are you saying they're using this tool that's going to be used across their entire day? Let me look into that. And that you could get buying from that. I'm not sure that'll happen before the end of the year, but it might. So anyway, I think there's probably a half a dozen really positive reasons why buying could come in before the end of this year. But I think because of the delays in paperwork, and the very natural human, annual human marking of holidays, I'm starting to think, Jeff, I hope I'm wrong, but I'm starting to think to get my much higher numbers, my 5s, my 8s, my 10s, it's going to be the second half of January, February before that happens. That's a long answer, but you're going to see $1 before Christmas, and I bet you see you could see $1.75 to $2.25 before Christmas. I'm not going to change my projections so you guys can make fun of me about them, but I think because of the delays, that's a more realistic end of the year target, basically two and a quarter end of the year target for Railtown. Maybe I should say $2, give or take 25 cents, is a better target for the end of the year. But then, Jeff, that doesn't mean anything's bad. That just means there's going to be a buildup of information and momentum starting mid-January. And I think you're going to just see an absolutely powerful first quarter, second quarter of next year. Anyway, that's a long answer, and I don't know if it helps, but I remain extremely positive on the upside of Railtown. I'm just concerned about paperwork and the holidays. That's it. Paperwork and the holidays, and of course that the institutions mostly close their books, at least for bonus purposes. It's end of October, end of November. So December's a month they play, or they show up in their Hawaii shirts rather than in suits. Ward Richardson. See, I love Ward. He seems to know what he's talking about. Unlike me, right? Is that what you're saying? Unlike me? Are you saying unlike me? Are you saying unlike yourself? Is that what you're saying? Unlike yourself? I don't like yourself either. So anyway, Ward is saying they have 10 months of news to report. I agree with you. It's just, when does it start? I think it's going to be great though, Ward. I'm a little embarrassed that things didn't happen more quickly, I guess. But I think the delays are not a reflection on business. They're not a reflection on what the fundamentals or the share price action is going to be. It's, you know what it is. They have to close the AIP deal. And for some reason, whether it's leadership, board members, regulators, intransigent signatories, I don't know. I don't know why it's taking so long. But like I say, it's going to end tomorrow. Then it's just a question, when do they file the paperwork? Then it's just a question, how soon does research come out? How soon is Corey able to go, and Marwan and Dr. Tom Core and Mike and et cetera, how soon are they able to go out and pitch this to all these institutions? And then hopefully there's one or two institutions that want to buy it while it's cheap. So establish the position while everyone else is skiing. I'd stay back and do that. I tell my non-existent wife, you ski, I got to go back to the office, and she'd tell me, well, that's why you don't have a wife. And I say, isn't your argument a little circular? Eric B. added 8 today. Good for you. Good for you, Eric. Ward Richardson, William, I totally agree with you. These lawyers have got to get a move on, or whatever the issue is. We don't really know what the issue is, but whatever it is, all hands on deck. Can't be that hard to fix it. Anyway, it'll be fixed tomorrow. By the end of the day, it'll be fixed. And then are they going to file the paperwork? Tomorrow? I doubt it. Got to get home. We got to get ready for dinner with my husband. We're going to a party. I can't do it tonight. How about never? Does never work for you? No. I think they'll get it done Tuesday or Wednesday. And then the race is on to tell the story. There's a lot of institutions in Canada who haven't heard the story. There's a lot of retail brokers who haven't heard the story. The race will be on to tell the story while everybody's getting drunk at Christmas parties and shooting meat moose for dinner. Dennis Alex, how do you feel about Citadel criminals with a buy and seller level? That doesn't. They're not doing it. Citadel's not doing it. Citadel's not doing it. They're just processing orders. We don't know what they're doing. The dollar and the loonie move all day long. So there can be arbitrage or bets on any discrepancy at a high speed, computerized way on the difference in the dollar prices, which they play by using the stock. It can be that they're on both sides of the trade because they're arbitraging. It's also arbitrage. The Canadian stock could trade at at, half a penny or a penny higher than the equivalent price in the United States, and the computers are matching that off, and they just try to collect half a penny. Those two things are arbitrage. I'm sure Citadel is representing shorts. I don't think in the case of Railtown there is a dedicated firm like the Toad, Andrew Left, and the Anson funds. I don't think there's a big campaign by whatever you want to call it, a hedge fund, to destroy the market cap of Railtown, because they never did a toxic financing. So that aspect of Citadel representing shorts, I don't think exists. Thank God. So we're so fortunate that Corey did not do a financing down in the United States with all the lying faces on Wall Street. But I do think there's a large potential short position. And so you could see, because the computers just sold automatically. When they put out the press release on the 11th, it said MOU, it said LOI, it said acquire, it said a few weeks. Well, the computers just start selling. It also said Canaccord Genuity. Canaccord Genuity is the go-to firm to process counterfeit trades. Remember, part of it's legal. Breaking security law is not. But so these dunderheads who make their living leveraging other people's capital, but they're in charge of these computers, and they've got to turn the computers on, shut them off, reconcile. They let their computers do the computer thing, which is this. The news says that 2 CEOs have agreed to a merger and a price and a number of shares. So, and it's Canaccord. So they know 3 things. If we start selling the stock downward, we can accumulate a pool of capital. So when Canaccord, in normal situations, when Canaccord designs an investment vehicle that they're proud to offer to a CEO, the CEO goes, really? Could you do that for me? Little old me? $20 million? Where do I sign? Well, they don't talk like that. They say, eh? You did that for me, eh? So that's number one. They'll have 20 million sitting in the prime broker. They can wire it. They don't have to call any clients. They're not taking any risk. They're not taking any risk. So they do it. That's number one. They do it over and over again. You've seen it. So that's one reason they start selling. Second reason, if they can sell the stock price down, the acquiring company, the company to be acquired, is going to look and say, hey, you offered me 50 million shares at 50 cents, but that stock's now 20 cents. I'm not doing that deal. I want 150 million shares, and I want it at 15 cents. So they've already won, because they've driven the price from 50 cents or higher down to 15 cents. If the two decide to go forward, Canaccord puts the deal together at 15 cents, cross the money, Bob's your uncle, everybody's happy except the shareholders. But they're happy. The third way is if they short it down, they get all this cash, they're selling stock that doesn't exist. If the company to be acquired says to the acquiring company, you know what, I don't trust you. You said 50 million shares was going to be worth this, and you're playing. Look what you've done to your own company. I'm out of here. And they walk away, they win. The stock price collapses. They may not have to pay taxes. They may not have to close their position. It may get seller box. So there's all sorts of ways for the shorts to win, and they win 99.9999999999999% of the time. They own the regulators. They use the same attorneys, and they're a great source of wealth for those attorneys. They own Congress. They own the Senate. They own the presidency. It's amazing. It's just amazing. So what a way to make a return. So that's what goes on, Dennis. But in this case, I don't think even that, well, they might still be trying to do that because they're thick-headed, but I don't think that's what's going on now, probably. Probably now they're, if I had to guess, because of the delay of the documents, anybody caught short in this stock has had time to move their shares to Frankfurt or to Panama Canal or to Cayman Islands and move it over to some account that's going to blow up if it does blow up. But they've moved it away from places like Citadel. So I don't see those guys being part of the selling. Now they may, being on both sides, they may be crossing shares, getting it out of short seller premier account to short seller, I don't care about this relationship account. They're crossing and spoofing just to move trades, because they can settle non-existent share trades by buying non-existent shares. That part's legal. Now, you might ask, well, what's going to happen with these guys? They're going to have a huge loss. Well, they might, but everyone's going to trust them. What if Railtown were to go to start running and Railtown goes to $35, let's say next May, and it's a lot of volume? Well, they can start selling into all of that, and maybe it pulls back to $27, and they can take advantage of that. So they're not scared of having stock under the water like we are, because they're going to keep trading. They know if they just stay in the game, always selling, that they can make back their losses. Look at AME and GMC. They had losses, but I guarantee you they made them all back and much more. So we think very linearly, because we can only trade and do it once at a time. It's a scheme. It's a trading pattern. So I think the only shorting that might be going on now for new positions rather than moving them around is just opportunistic day traders. And like today, the stock is down 3 cents. Well, now it's down at 1.5 cents. But you've got volume today of 118,000 shares. Just for ease of arithmetic, if the group of shorts, day trading, short-term trading shorts, sold it all at the high at 46.6, let's call it 46 cents, and they were able somehow to cover it all on the low. They don't have to do it as one trade. They just can do rapid fire, using the dark pool, using Citadel, going back and forth. But if just, to use round numbers, 100,000 shares at 3 cents, it's $3,000. Now, obviously, maybe they didn't get all that, so call it $2,000. And it's not costing them their own money, comes out of the profits. They're using somebody else's desk, somebody else's wad, and they make $2,000. It's so much easier, and they're doing it across every stock out there. It is so much easier than studying research reports, coming up with your own ideas, buying stocks, answering to investors, actually having investors. It's so much easier. So that may be going on Citadel right now, but it doesn't scare me. It's not very much. And it'll self-correct. Railtown, Dennis, is not a hot money stock. Railtown is not a day trader stock. Railtown is not a promoted stock. Railtown isn't a pump and dump stock. Railtown is not a stock that a bunch of guys run up so their friend down in Puerto Rico can get out of it. Or whatever, wherever they live, Cayman Islands. It's not that. So it doesn't scare me at all, Dennis. Doesn't scare me at all. Justin Babish, does anyone have Kathy Wood's email? Maybe we can call her about Railtown. She'll never invest in anything until it's already in the headlines. She's classic. That's my judgment. I stopped following her at all, but I tried to pay attention for a while. Those glasses on to look intelligent. She's always after the trade. After the trade's already happened, she's talking about it. After everyone knows about the trade, she's talking about it. I don't know how she makes any money. I really don't. So I don't think it would help. Dennis, I believe Citadel was traded MMTLP. Yeah. Citadel is one of the largest, these little market makers and the order flow. There's two big companies. One is Citadel, and I think the other one's called Virtue. I can't remember right now. That's it. So of course Citadel's in there. This is not anything new. When the merger is complete, the news will start to flow, Ward Richardson said. Yes, I agree with that. But I just don't know how quickly. I hope, Ward, that the guys and girls at Railtown and at AIP, I guess, I just hope that they just hit the ground running right after the AIP deal and news starts flowing. And if they have to hire an additional solicitor, pay the money. You don't want to get rid of the ones you have, go hire 3 or 4 more. Hell, go down to the University of British Columbia and get some business school students to intern. Make it a project. Just do anything to speed it all up. Dennis Alex, please explain selling stock that doesn't exist. I'm not going to explain it. I think you know what it is. I'm almost legend. Thoughtful Thursday, sir, William. Just tuning in and catching up. I read that CSE listed companies have 10 days after a merger completion. Oh, Lordy, 10 days to file a material change report. I hope that's 10 regular days. So if they close it tomorrow, 10 days would be the following Monday or Saturday or Sunday, but oh, Lordy. Well, I'm almost legend. I can almost guarantee you they'll take that in my entire amount of time. If past is prologue, so darn it. Well, anyway, that doesn't change my timetable that much. Maybe it starts the research and information and telling the story. Maybe it starts at 2 days later. I'd already given up on next week, so I said Monday of the following week. Maybe it's Tuesday or Wednesday of the following week. But thanks for letting me know. I didn't know that. 10 days, darn it. U.S. companies have to do it within 4 days, as I'm sure you know. Well, I'm not sure I did know that, but I'm not sure it was at the front of my knowledge. It aligns with the 5-day settlement, which we don't have anymore. Yeah, that's something I used to know, but I would tell you I wasn't thinking about it at all. So thank you for pointing it out. So Canada is just slower in overall business transaction, it seems. Yes, I think that's true. As a U.S. investor with my career background, it makes even more sense why you get frustrated at the Canadian pace of things. Yeah, I think it really runs risks, and I really think it's unfair to investors. But your observation is actually a very good one. It's a different regime. If you go to the DMV to get a new license, I mean, here it's gotten better, but if you go to the DMV to replace your driver's license, I always bring a book and do whatever they say. I never go for lunch. It's going to take 3 or 4 hours or longer. It's going to say, well, you got to go to that line. Well, I was just in that. Well, you got to. Okay, yeah, I'll do it. When I was younger, hotshot, I might try the route of, I don't have time. I've got to get. That never worked. Never worked once. So I guess we just have to, like you just pointed out, we just have to learn to, deal with it. In terms of the United States, they may have 4 days, but I think I don't remember all the examples, but I think it happens very quickly, same day in the United States. There's no reason. What do you need the extra days for? Hopefully I'm wrong. I'm almost legend. Hopefully this is a reflection on I can't. I can't, and I do not blame the company. Nobody's told me anything, so I'm doing my best from the company. I'm doing the best I can to project, but it's what happens. We're all grown-ups. I just hope the deal gets done tomorrow. It should. Wouldn't that be a beauty if I don't even want to jinx it. I don't even want to think of what could go wrong. We've got 35 minutes to go. Barely social gator. Ooh, hot money. I don't know what to say. With that, I'm glad you got some enjoyment out of making a post. It's a 10-day calendar day window, thankfully. Good. Again, they don't have to wait 10 days. It doesn't say you have to wait 10 days. But you make a good point, darn it. They probably will take 10 days. Or if there's a problem with maybe when they tune it in, the regulator says, we don't like this, you got to change that. And the regulator knows that she has up to 10 days. I don't know. Let's just play it out. I'm overcomplicating it. I'm trying to see everything that can go wrong. Let's just maybe things will turn out much better than I'm expecting. The stock now is 42.91 to 44.7. The volume is 118,000 shares. The last trade is 43.62. Last trade is 447 shares. I can't tell. There's two trades for 6,000 shares at 435. I would guess that was buying, but it's hard to tell. It's right in the middle. Brandon Neely, very good info you emailed me. Thank you. You're welcome. I realized why you have anyway, sometimes when you type somebody's name in, the email pops up, yours doesn't. And it's because you have this, I'm guessing it's because you have a unique email. But anyway, I was able to do it. But that's probably why I just gave up the first time around. But I'm glad you got it. I'm almost legend. Maybe they need extra time to go to Tim Hortons and get some sliders and poutine, or is it poutine, to celebrate transaction success. Yeah, exactly. Probably. Look, it's gonna end. It is gonna end. And then whatever's causing the friction will be over with by definition. There is some activity going on. The stock hasn't really traded, but the bid and the ask are moving around. They want you to think there's a lot of stock for sale, which I don't think there is. So we got 30 minutes to go. Let me see if there's anything in the War Department going on. looks like that headline's been taken down, which good. There's trouble. There's trouble. The repo market is locking up. So that's that might be some of the selling just for cash. I hope Fetterman's okay. He's a big guy. If he fell, that's gotta hurt. Commodities are breaking out higher. The great rotation approaches. I don't know. Maybe I'll read that one. But that's the whole idea, that leadership, you rotate out. Anyway, it sounds boring to me. Buy the golden dip in the miners. Matt Badali has done the arithmetic, and he says miners are a screaming buy here. That sounds interesting. Printer is coming. NVIDIA CEO, China is going to win. Well, as long as we're just squandering our abilities uselessly. All right, let's read this. Burry, this is an old article by Adam Sharp, posted November 4th. Burry's new Big Short on AI. The Big Short is one of my favorite movies and books. I read the book, but was it called The Big Short? Can't remember. Maybe. It's a powerful story of investors who bet against the housing bubble, who then persevered through adversity and won big. The story focuses on Michael J. Burry, a small but successful hedge fund manager in California. In the movie, Burry is played by actor Christian Bale. There are others featured in The Big Short who bet against the housing market, but today we're going to focus on Burry and his new AI short. I don't know how this article ends, so if it's negative, I didn't, First, however, some background is in order. Around 2004, 2005, Burry discovered that lenders were giving huge loans to borrowers with bad credit, and as a topper, many of these mortgages were teasers with adjustable rates. The first few years were artificially cheap, then the payments would balloon. Burry dissected the data and discovered a great way to bet against housing using credit default swaps on mortgage bonds. Many of Burry's hedge fund clients thought he was insane. Betting so much of the fund's capital against housing seemed ludicrous. Burry was forced to restrict fund redemptions, so his investors had no choice but to ride along with him. When the bubble finally burst, Burry's fund made a killing. After fees, his big short returned almost 500% to investors. Burry had beat the big banks at their own game. But be warned, this story has inspired countless traders to attempt their own big shorts with mixed results at best. Burry is back with a big AI short. Michael J. Burry is a reclusive fellow. He keeps a low profile, but occasionally he resurfaces on Twitter. He goes by the handle Cassandra. Cassandra was an ancient Trojan priestess dedicated to the god Apollo. She was cursed with the ability to predict the future, but never was she believed. They say it's because she was inhaling all the natural gas seeping up out of the ground, the oils, the fumes. The last time Burry appeared was in January of 23 when he posted a simple message, sell. Since then, the market has soared 69% higher. Burry got burnt on that big short. Shortly after, Burry deleted all his ex post facto, and deactivated his account. But now Cassandra has finally returned to Twitter, just as 13 SEC filings disclosed his hedge fund, Scion Capital, Scion, the dotted lion. Scion Capital took big short positions on Palantir and NVIDIA. He has a call on Pfizer and a call on Halliburton. Looks like he owns Lululemon, SLM, and Frau Brucker. As of September 30th, Burry's hedge fund held puts worth $912 million in Palantir. I'm not sure. Yeah, it says value at the top. It does say value at the top. So, okay. Held puts worth $912 million in Palantir and $186 million in NVIDIA. Burry has seemingly initiated a new big short on AI. It isn't surprising to me that Burry is betting big against Palantir. It might be the most overvalued large cap stock I've ever seen. To be clear, Palantir is growing fast, quickly, and appears to have tech which nobody else does. But it still looks way overpriced. Its current price to sales ratio is an incredible 126x. The company is valued at $491 billion and only produced $3.9 billion of revenue over the past year. Even during the dot-com bubble, no large company ever reached such lofty heights. Burry followed up his big AI short disclosure with some charts showing how the AI bubble spending is similar to the dot-com area. He points out that we don't know the exact position now because everything was filed on the 30th of September. Attempting to nail the top on red-hot stocks like these is extremely difficult. Even when he made the housing bubble bet, Burry had to wait years for it to pay off. In the meantime, he had to pay significant premiums on the the credit default swaps. For a while, it looked like his housing bet might fail. But eventually the housing bubble did pop and Burry came out way ahead. We'll have to wait and see whether he'll be proven correct with his latest AI short. It's easy to see that certain AI stocks are overvalued. Timing the short, however, is the tricky part. Is this the beginning of a crash or just a correction after a parabolic move and there's more upside ahead? I'm not taking a bet either way for now. That's on Palantir. My advice, don't bet the house on an AI collapse. As Keynes famously said, the market can stay irrational longer than you can stay solvent. Aren't you glad I read that to you? Don't you feel like you know so much more than you ever did? Okay, so Railtown with 20 minutes to go, 42.92, 42.91 to 43.58. 131,000 is the volume. Last trade, 1,800 shares at 42.92. They just had to get out of $800 of stock on the bid with 20 minutes to go. Somebody just had to sell. Now that we know a bit more about the Canadian pace of things, do you have concerns about institutional Canadian investors taking long? Yes, I do. I would have thought Canadian institutional investors were chomping at the bit as soon as this deal's done to buy. I don't think they're going to start buying next week. Or the following week. I think institutional buying will start 3 to 4 to 5 weeks from now. But I think that's the delay. I don't see it going further into next year. On the other hand, if they're taking vacations, some of them, it will be next year. But I think it's going to be a bit of snooze, you lose. Like I say, I have no idea if he'll do it. But I think Mavericks, John Ruffalo, he's going to act. As soon as he's allowed to act, I think he's going to act. I think Omers is going to act. Mike Nobrega and John Ruffalo founded AIP. They know the power of, let's say that there's more companies now, and let's say their revenue has grown, so their demand on the Thales system, their spend is higher. Let's say it's 150 million by the time they get everybody over there, and it's growing. Let's say they get 10%. That's 15 million in almost 100% revenue at the multiple of Lang Chain. That's a huge $4, $5, $6 stock. If we look at SoundHound, its now market cap, it's down. So its market cap is now $5.5 billion. They're projected to do like 160 million next year. Let's call it 175. Not making any money, by the way. So it's a 31.5 multiple. Let's call it 31. So 31 times 15 million, 100% making money revenue. That's $500 million in market cap divided by 200 let's say 250 shares, assume they issued some. It's $1.86 a share. They know this, I'm almost legend. Mike Norbrega knows it. Um, John Ruffalo knows it. So why would they wait? I don't think they're going to wait. So that's my wild card. But I'm so burned by making aggressive predictions. Dr. Tom Core is on the board, but he, I assume by being on the advisory board, they don't have any restrictions on what they can do. But Mike Norbrega, advisory board member, AIP founder, former president and CEO of the Ontario Municipal Employees Retirement Systems, one of Canada's largest pension funds. Omers is an obvious buyer. They might take a little longer because he's got to explain it to somebody. He's not CEO and president anymore. But John Ruffalo, advisory board member, AIP founder and managing partner of Mavericks Private Equity, founder of Omer's Venture, which he ran for 8 years. He invested $500 million in 40 technology companies. I think that's your guy. I think Mavericks Private Equity will start buying Railtown as soon as he can, as soon as he's allowed to. And he doesn't have to wait for guidance or talk to Corey or, meet with Dr. Tom Core or visit the headquarters. He doesn't have to do any of that. He knows it all. I think Mavericks will start buying, not next week, the following week. And I think once somebody starts buying, we won't have all this angst anymore, because if they were to aim to buy 4.9% of the company, fully diluted, they'd have to buy essentially 11 million shares, 10,900,000 and something, 11 million shares. If real buying comes in and the bid doesn't move, the stock, those cowards that are nipping every day for a little bit of money, they're just going to go somewhere else. They'll go over to MTEN or GDC or whatever, fill in the blank, GNS. So, ostensibly, I don't think it matters, but looking at the average volume here for Railtown, 252, I think this is going to be a useless calculation. But it's ostensibly to buy that many shares, and if the average volume doesn't change, it's going to take 43 days. It's going to just change. It's just going to change the dynamics of the bid and the ask. The stock is going to go up. I predict it's Mavericks that does it. Thank you, Steve. That's awesome. Awesome. All right, we have, I don't know how much, 10 minutes to go, 11 minutes to go. And all I want to do is go out front and scream. No, I wouldn't mind. it's 0.4301 to 0.4358, 22.5 by 6,000. It closed at 0.4528. So as long, no, I guess I'm wrong. It's going to close in the red. They want to have it close in the red for the week. Darn it. I'm so mad at my mother. The other day, she called me up and she wanted me to move her weights to the attic. Nicola. Nicola. So much evil in the world. All right, the last trade is still the same trade, 43.58. 43 bid for 25. Now it's 43.01, 22.5. 43.58 is the ask, which also is the last trade. Eight minutes to go. Fingered is down 8 cents at $1.27. $1.27. $1.26 bid. G-Bucks is down 4 cents at 10 cents. 0.108. GDC is down 30 cents at $4 and essentially 43 cents. Swell. It's all swell. Everything is swell. Let's see how the market's doing. The Dow is down 800. NASDAQ is down almost 600. S&P is down 100. So it's just one of the sell-offs. It's a pullback. It's all right. It's okay. It's okay. $43, 25,000 bid for. The ask is 43.58 for 6,000. Still the last trade. All right, 6 more minutes. will you just leave? I miss those days when 4 o'clock came, you could meet the boys downstairs, have a drink, play a little liar's poker. I miss those days. Of course, I miss being young too. Now the bid is 0.403, but it doesn't look like they're going to get it above yesterday's close. No way. The stock's going to close down almost 2 cents. Somebody has to come in with a big order to turn it green. That's all right. It's all right. That's all right. That's okay. We're going to beat you anyway. That's all right. That's okay. All right. It's boring to watch. Let me see if there's some other snippet out here worth looking at. This baseball player, Emmanuel Klaus, they arrested him at JFK. He came, I don't know why he came back to the United States. Stay away. Do you know that whales have a language? They do. They're also dying because of Fukushima. Wow, President Trump announces, is this possibly true? He's going to pay out any funds under the Affordable Care Act. It's going to go straight to the patient, to the American. It's not going to go through the insurance companies. Wow. Sounds good. I don't know if they'll get it passed. No trading in Railtown. Last trade 43.58, 43.29 on the bid, and the ask is 43.58, 23,000 by 6,000, and never the twain shall they meet. Now it's 43.31 by 43.58, 43.32 by 43.58. Just step 43.33. Just step up and buy it. 43.34, 43.35. It's only 43.58. Just take the leap. Take the leap. 43.37. Nothing's happening. It's just computers squawking at each other. They don't care. 43.39 by 43.58. 43.4 by 43.58. 43.41 by 43.58. Now it's back down. Still 43 by 43.58 basically. 1 minute to go. Last trade was 150 shares at 43.58. We're waiting for some crescendo here, and it's not going to happen. It is just not going to happen. 43 by 43.58, 35,000 by 6,000. Okay. Looks like it's going to be, it's good. Good. Julie Kim, I'm so happy I transferred all of the GTI, Finger, G-Bucks, ZJY, LDRT. Otherwise, my balance would be less than half of the current. I'm not sure it'd be that much. Well, I don't know your ratio. That's true. I don't know how much you had of each thing. 43.58. But, you know, on the face of it, out of those four, three of them are really wiped out. And one's way down. Good for you, Julie. I'm glad you did too. I couldn't sell, so you know, Steve, I have to say it. I tried buying 99,000 shares. It took a week between 38 and 44 cents in 5 different trades. Wow. You're brave. I mean, it worked out, but you're brave because I really think even for all of my, let's call it caution, unless you want to call it negativity, concern that it's going to take longer, any day this could break. And particularly after they get the AIP deal done, it could break. I mean, this stock was 60 cents just what, 6 or 7 weeks ago. And the news has just been better. It's just been better and better and better. It's just what they can do, what the shorts are able to do, particularly when we run out of money. And they do it in Canada too. Whatever the news is, they just sell. And so then you go from studying the news and extrapolating what it means to just looking at the price. And then they have you. When you do that, they have you. Oh, he could have been extradited? Okay, I didn't know that. Sold paper silver to do it. That, you know, silver might double from here in a run up by, let's say, 3, 4, 5 months. But I think you did the right thing. It kept getting harder and harder, and I kept having to hike my price. It kept getting harder and harder. She had to hike her skirt. Oh my gosh. Son drove past his house. Weeds 3 foot tall. Wow. Well, I drove past your house last night, and I looked in your window. Lately I ain't been feeling right, and I don't know the cure. Still I can't help would you take me back? Would you try me again? You say that I cheated, that I was not what you needed. But you know, you're not being kind. You know you lied. You say you tried. But oh, try me again. All right. I think that is going to be a Thursday. I did see an article that we're going to war, so pray for peace. And I wish each of you peace, and I hope you have a good night. We will reconnect tomorrow sometime. Hopefully the deal closes. Maybe it closes during the day. Wouldn't that be great? Anyway, talk to you later. Thank you.